Hey guys, it's Carter. Welcome back to the channel. Now in today's video, we are going to be talking about by far the easiest swing trading strategy you guys can do with a full-time job. So I hope you guys will enjoy it. If you guys do, hit that like button and subscribe. Also, we have an amazing course in school where we talk about how to find these stocks, my strategies, my mindset. It's a one-stop shop for all of your swing trading needs. There's private live streams, there's group chats, there's quizzes, there's lectures. It's absolutely fantastic, and you guys can use code YouTube to get 20% off. So check it out. I highly recommend it, and I'll see you in there. But guys, let's dive into this. Now, before we get started with my strategy, what would I recommend doing if I was just starting out with swing trading? A lot of people that click on this video are going to be asking, this question. So starting out, I would invest in education and practice. Now, the great thing about brokers nowadays is some of them have paper trading simulators with them. Now, what this is it's simulated money to practice. Practice your entries, your exits, your risk management systems, so you can be more confident when you fund an account. Now, the one that I would recommend is Mumu. They're absolutely fantastic. It's the broker I've been for over 6 years. I absolutely love them, and I'll put them down below. So that's the software I'm going to be showing you guys today. So check them out down below. But let's kind of dive into this here. So when it comes to swing trading, what do I look for? So right off the get-go, I look for a stock that's on some sort of upward trend. Looking at SHOP, which is the stock we have up, you guys can see we have this nice upward trend, which is always good. You always want buying pressure involved. On top of that, one thing here that I think is very, very important is this blue and red line. The blue line represents the 90-day moving average line, and the red represents the 200-day moving average line. These act as support and resistance. So looking at it in the past, you guys can see that we've seen tendencies of it using, support when the stock is above it. You guys can see it hits the 200, but when the stock is below it, it does see a tendency of it using as resistance. Here you guys can see we did get this earnings beat, which caused the stock to pop above it, and then recently we had some sell-off back down to that 90-day moving average line. So for me, really, you could hop in near and around this 90-day moving average line, which is an overall support line, set your stops just below it, and you're risking about $2 to make a couple of bucks. We'll go ahead and draw it out so you guys can see it a little clearer. So I hopped in near and around $75 even, right as close as I could to get to that moving average line. Now looking at this here a little clearer here, let's go ahead and draw it out so you guys can see. This stock could easily squeeze up to some resistance near and around this $83 mark, and we would set our stop loss just below the 90-day moving average line, near and around this probably 72.42 mark. So we're risking about $1 to make $3.39. Now, that's if it hits the old resistance, but it easily could squeeze up to 91, which we've seen in the past, which would be a 6-to-1 risk and reward. This is an absolute fantastic trade and one that I'm definitely in on, and I'm already up near and around about $500 on, even though it's only up about 2 or 3%. Another stock here that we were looking at that has gone up tremendously is Palo Alto. Now, Palo Alto here, as we zoom out, you guys can see that it's used that 200-day moving average line as support in the past. And what do you know? It hit that 200-day moving average line. It's gone from $269 all the way up to over $300 today. It's up 7% today. And what happened here? So what we did is we hopped in near and as close as possible to that 200-day moving average line. We set our stop loss just below it, like we did with the 90 on the other one. And what we did is we kind of set our we set our resistance or our profit near and around this old resistance. So we're risking right now, we're risking about $1 to make over $1.78, which is a great risk and reward ratio. And that's if it goes down, but most of the time we set it just below that 200-day moving average line, which is an absolute great trade. We'll go ahead and do one more, a stock that's already up about 5% today, and this is ticker symbol BLND. You guys can see that it loves to use this 90-day moving average line as support, right? It hits it several times in the past, hits it again, and we already got a 5% move. So using moving average lines, RSI lines, and MACD indicators are an easy understanding on how to find these stocks on support, how to find them undervalued, and you guys can see that one of the reasons we hopped into this is looking at the RSI. Right now, back in, when it sold off, was trading at a 31. The last time it was trading for a 31 was all the way back in here where we got, a little move from $1 to about $1.25, which might not seem like much, but that's 25 cents on a dollar. That's like a over 10% move there. But yeah, using these indicators are really easy ways to find these opportunities. Looking at the moving average lines and the RSI lines. So this is just a little example of how you guys can start swing trading. And the great thing about swing trading nowadays and trading in general is you guys can preset everything. You guys can preset your profits, your stop loss. You can preset your limit orders, so the amount you buy for. So you can preset everything. So when you're at a 9-to-5 job or a job, all you have to really do is do the work before or after your shift. So guys, I hope you guys all enjoyed it. If you guys have any questions, by all means, ask them in the comments, and we'll see you guys in the next one. Take care. Don't forget to check out my swing trading course, and we'll see you guys tomorrow. Take care.